Welcome to Kharutai channel. In the earlier video, we have discussed meaning and definition of depreciation. In this video, we are going to discuss causes of depreciation, the need and importance of depreciation, and for calculating depreciation, what are the factors that we need to see. Causes of depreciation. Why do we depreciate? First and the most important reason is normal and natural wear and tear. When we bring any new asset, we use it for a while, and obviously after a while it is going to get damaged. We are going to see that it has got discolored, it has scratches, it might have got some cracks. This is example of calculator. So after, now you are in 11th standard, your own calci in after you finish BCom, many numbers would have been gone, right? So because of actual use, there is wear and tear, and so we have to depreciate. Second is passage of time. Fixed assets get depreciated due to effluxion of time. So it is necessary to depreciate them even if they are not in use. What is effluxion of time? Time has passed, time is running out. So whether you use that asset or not actually in the business is irrelevant. Its value gets reduced. Generally, assets like patents, trademarks, copyrights, leases, software, designs, these are intangible assets, right? These assets have some specific legal life. It might vary from 7 years, 10 years, 60 years, as the case may be. We are not going into the legalities of it. Here, for the example's sake, say trademark is having 10 years of life, and in first year we have paid legal fees of 10 lakhs for trademark. So the value is of 10 lakh when we got that trademark rights, right? When we got that trademark license. However, the value will get reduced every year as time is passing by, right? So it will not stay at 10 lakhs. It will go on reducing as the years go by. At the end of 10th year, it will become nil. So during this period, even if that asset is used or not, still we will provide for depreciation, as after 10 years it will be of no value. We won't have that right anymore, we won't have that asset anymore. Third point, obsolescence. On account of technological development or changes in techniques of production, the old asset become obsolete or outdated, and all these cause reduction in their value. Now, for example, earlier we used to use landlines a lot. You have seen in every household, right? Now everyone is having smartphones in their hands, so no one is using landlines anymore. So landlines have started becoming obsolete. They have started becoming outdated, right? They're not completely obsolete or outdated as of now. Still you can see businesses are using them, but still the use have reduced, right? It has started becoming obsolete, outdated, and so its value is also reducing. Then sixth point is similar to third point, obsolescence. Sixth point is invention. So we will take it up together. When the new machines or assets are invented, the earlier assets or machines being used may lose their utility, and hence their value is reduced. Now, for example, earlier we used to have computers with CRT monitor, we used to have CRT TV, right? And now everywhere you are seeing flat TV, flat LED monitors. So because of this invention, people are no more using CRT monitor, which was inconvenience. It used to take more space. Now flat TV or LED monitor is taking less space. So it is preferred than CRT monitor, right? CRT product is getting outdated, it is losing its utility. So obviously its value is going to get reduced. Fourth point, depletion. To deplete means to empty. Depletion is also one of the causes of decrease in the value of wasting assets such as forest, oil wells, mines, quarries, etc. Depletion means the asset gets emptied, right? When mines are extracted, when oil is removed from the well, the asset gets reduced, it gets used up, right? For example, this is silver well. So we are extracting silver, we are removing it from the well, it will get reduced. So the asset value will also get reduced. So what is the meaning of wasting asset? The asset that gets wasted, that is it gets used up totally. It is finished when removed from the well, right? Fifth point, natural calamities or impairment of an asset. The price of fixed asset decreases due to natural calamities such as earthquakes, storms, cyclones, fire, floods, or accidents. So, if there's a factory and there were floods, walls might have got weakened because of flood water, walls might have got cracks. It is not as strong as before, right? The damage, the impairment has to be written off in the books. Also, if there is plant and machinery in the factory and there is fire due to accident, then that machinery might get damaged, its capacity might get reduced. Such damages also we have to account it. So that is actually not depreciation as such, it is called as impairment, but they are considered in the causes of depreciation. This is one of the reasons where the value of asset gets reduced. And now the last point, seventh one, market value. Market value of an asset goes on changing according to the prevailing conditions. As per the changing conditions in the market value also change. Hence, depreciation also changes. When market value of an asset decreases as compared to its cost, it causes a depreciation on it. So, in market, when we bought the new product, only few were available and the value was 1 lakh. But after a year or two, there were many new products came, bulk availability is there, and now substitutes are also available. So the price has gone drastically down, and so this kind of situation also reduces the value of fixed asset. This is also the cause of depreciation. What is the need and importance of depreciation? We have to charge depreciation to profit and loss account as it is an element of cost. It is also essential to arrive at true value of the asset and also net profit or loss during a particular accounting period. If we ignore depreciation, then we won't get the true value of asset, and as all expenses are not booked, we have ignored depreciation, we won't get correct net profit or net loss of the business. Even if an asset is not in use, its value is reduced due to passage of time. We have discussed this point earlier, like even if the asset is not used, the asset gets damaged by rusting, or if it's an electronic item, it won't work properly. So depreciation is a cost or a loss to the business. We have to book it compulsorily in the books even if the asset is not used. It is a non-cash expenditure. What is non-cash expenditure? Here in depreciation, when we book it in the profit and loss account, we don't pay out any cash. For many expenses like salary, transportation, whatnot, we pay cash, right? Cash, not in the sense of hard cash or bank. There is a cash outflow from the business. In case of depreciation, there is no cash outgo, right? We have already paid while purchasing the asset. While charging depreciation, we are not again paying any cash. So depreciation is a non-cash expenditure, and any expenditure is a nominal account. So depreciation is a nominal account. Second point, if depreciation is not provided and deducted from the value of assets, the assets will be overvalued. What happens when we provide for depreciation? The value of asset gets reduced, and if we are not charging it, then what is happening? We are showing the asset at the same value. It should have been reduced. Now we are overvaluing the asset. That means the value is more in the balance sheet, right? Fixed assets are shown in balance sheet. Balance sheet shows the financial position of the business, and if we are not charging depreciation, we are overvaluing assets. We are showing assets at more value. That means we are not showing true and fair value in our balance sheet. So that's why we need to charge depreciation. Third, depreciation is necessary to make provision for replacement of old assets. If provision for depreciation is not made, the business may not have sufficient funds to replace them. As you know, assets have some life. For example, there is a computer, it will work for around 4 to 5 years. After that, you will have to replace the old asset with new computer, right? For that, if you are charging depreciation, you are creating funds for replacement. You are putting aside some fund. It is that kind of thing. But if you are not charging depreciation, you might find that you don't have sufficient funds to replace them. So that's one of the important reasons why depreciation is to be charged. Fourth point, it enables the business to compute and pay correct amount of tax to the government. So if you want to calculate and pay correct amount of tax, you need to know correct profit or loss of the business. For that, you have to charge depreciation. Then you can pay the right amount of taxes to the government. And the last point, fifth point, which is again the repetition of third point, depreciation must be calculated and equivalent funds should be provided for every year so that at the end of its life, the asset may be easily replaced. That's what we talked in third point, right? We have to calculate depreciation and we have to put aside same amount of funds so that at the end of the fixed asset life, we have to replace that asset and we will have that fund for it. That's what it is saying. We have to put aside funds equal to the depreciation. Factors to be considered while charging depreciation. What are the factors? What are the things that we have to see for charging depreciation? While calculating depreciation, we have to take into consideration what is the cost of asset. Second is useful life, that is useful or estimated economic life of asset. And third is estimated terminal value or scrap value or residual value. Let's see them in detail. So first point is cost of asset. The cost of asset is an important factor while computation of depreciation. For calculating depreciation, what is the basis? Cost of asset is the basis. So it is an important factor. Historical cost of the asset represents the money spent in connection with its acquisition, installation, or improvement thereof. Again, historical cost is also called as original cost. And in this, we don't just consider purchase price, the acquisition price, but we also consider all its other costs like installation and improvement cost in the historical cost, in the original cost. If we want to write a formula, we'll say original cost of asset is equal to purchasing price of asset, that is acquisition cost, and its installation or incidental charges. Some machines are not ready to use. We have to install them. We have to put their parts together and then it can be used. Incidental charges are the charges that we have incurred to bring that asset to our place and make it usable. So right from transportation, transit insurance, custom duty, loading, unloading charges, brokerages, for installation we might have paid for wages, and if we have brought a second hand asset, we might have spent some amount for its repairs to make it workable. So that cost will also be included in this incidental charges. So original cost is not just purchase price. We also consider its installation and incidental charges. Second point is useful life. It is also called as estimated economic life of asset. What is useful life? The useful life of an asset is generally taken to be in terms of years or working life of the asset's expected utility to the business concern. Generally, when we talk about life of an asset, we consider it in terms of years. The life of computer is of 5 years, useful life is 5 years, useful life is 10 years, that way. And expected utility, we are expecting some use out of it. In other words, it means the business should use the assets till the business gets useful services from the asset and earns profit from its use. That means business should get something out of it, but not just something. You should also be earning profit out of it. If you are getting something, but for getting it you are spending more, that means you are making losses, then that's not useful life. Useful life is what? When you're, what's the life of an asset in which you get benefit out of it, and that too profitable benefits out of it. Third point is estimated terminal value, which is also called as scrap value and residual value. Scrap value is very commonly used, so you can use that. Scrap value is the realizable value, net realizable value of the asset at the end of its economic life. We have talked about useful life. After useful life, when we dispose of, sell off the asset, we get some value, that is realizable value. But we are talking about net realizable value, right? What is net? So if we are scrapping out a fixed asset, we are selling off the fixed asset, then it might happen like there is a machine, a big machine, and we are selling off its metal body, right? So we have to dismantle the machine. So that is removal cost, you can say. Or there might be a hazardous item that you are required to dispose it of in a specific manner legally. So that might have some other cost, or just a normal fixed asset, but you have to transport it to the other person. So there can be any kind of other disposal cost or removal cost. So your sale value minus such cost will be your net realizable value. That value is your scrap value, residual value. We have to see the factors for charging depreciation. What are the three factors? We have seen cost of asset, useful life, and scrap value. Let's see the example. In this, we have purchased a machinery and its purchase price is 5 lakh. So these details are given. So what will be the cost of asset? Cost of asset will be purchase price, installation, and incidental charges. Will have to add up all these charges. So purchase price 5 lakh, installation charges 50,000, transportation cost 20,000, professional fees. He is a technician, he is an expert in this installation of specific machinery. So for him, that's a professional fees that also we will include in cost of asset. And testing cost is like before starting our main production, we do a trial run if the production is of the quality as required. So we are testing it. That cost will also be included. We have added all the cost for getting cost of assets. So first component we have got, what is the price? This comes to 6 lakhs, right? 6 lakhs. So our cost of asset is rupees 6 lakhs. Then is useful life. Useful life is given 10 years, and scrap value is, what is scrap value? Is realizable value minus removal cost. That will be 60,000 minus 10,000. So our scrap value is 50,000. So we have got all the three components that are required to compute depreciation. In some sums later on we'll see in the examples that if percentage is given, then this scrap value is not required. So to summarize causes of depreciation in the sense that what are the reasons where the value of fixed assets get reduced. The first reason is normal wear and tear, that is actual use of asset. Then is passage of time, as the time passes. For example, for intangibles, as the time passes, the value gets reduced. Even if the asset is not used, we have to charge the depreciation. Third point is obsolescence, that is when technology develops or changes, old asset becomes obsolete, that is outdated, and because of that the value of old asset is reduced. The similar point was invention. When new product is invented, old asset loses its utility, and because of that value gets reduced. Fifth point is depletion. Deplete means to empty. What gets depleted? Wasting assets get depleted. What are wasting assets? The assets that get completely used up when extracted, like forest, oil well, mines. So when assets are removed, the value of asset gets reduced. Then next, sixth point is natural calamity or impairment of fixed assets. Because of earthquakes, storms, accidents, fires, flood, or any other accidents, fixed assets may get damaged. Such damages we have to account in our books. And the last point is market value. As per the prevailing market condition, the value of fixed asset may get reduced compared to its cost. So the need and importance of depreciation, we have to charge depreciation to profit and loss account to find the true value of asset and the correct profit or loss of the business. Depreciation charge is compulsory even if the asset is not used. It is a non-cash expenditure and it is a nominal account. If depreciation is not provided, our assets are overvalued, which does not show true and fair financial position of our business. Depreciation is charged for replacement of old assets, otherwise we won't have sufficient funds to replace the asset. If we charge proper depreciation, we compute proper taxes and pay correct taxes to the government. This fifth point is repetition of third point. We have to set aside funds to replace the old asset with new asset at the end of the life, and that amount should be equal to the depreciation charged. So what are the factors that are to be considered for charging depreciation? First and most important one is cost of asset, which is also called as historical cost and original cost. What is included in that? Purchase price and also any installation or incidental charges like transportation, wages, etc. Then is useful life, is also known as estimated economic life. It is calculated in years. Economic means expected utility, what it can give. So till the business gets a useful service and profits from that fixed asset, till that time we can say it is useful. And the last point is scrap value, which is also called as estimated terminal value or residual value. At the end of economic life, what is the net realizable value? So what is scrap value? At the end of economic life, what is the net realizable value? What is net realizable value? Sale value minus any disposable cost or removal cost. So mainly three factors: cost of asset, useful life and scrap value. Thank you for watching the video.